please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
With the monetary policy behind you, at least that level of uncertainty is not there. It was a great policy in terms of the balance it achieved. So looks like for the moment, the bulls definitely will not relinquish control.
Okay, yes, perhaps for the moment is the key word, right, or the key phrase. But, you know, also the FII selling has reduced quite a bit. I mean, yesterday we saw selling of around 80 odd crores. This is very less compared to what we've seen over the last couple of days. I mean, look at that. On an average, you've seen selling of around 200 crores over the last few days. And DII, domestic institution buying, has also picked up. So we saw about 700 crores yesterday. Also, we have the monsoon. So the first day of proper monsoons is always, you know, good for the bulls on Dalal Street. But Lata, on the RBI policy itself, yesterday I was speaking to Sanjay Shah, who indicated, you know, from Morgan Stanley, who indicated that this is something that was on expected lines. Generally, the central bank is preemptive when it comes to things like this. So not too much of an impact on the markets.
I would think so. Let me just first count the positives. In the first place, it was an amazing balance that the policy could achieve. It hiked and it didn't scare the market because it came with a neutral stance and it came with a unanimous vote. So, you know, it isn't that there are 3 or 4 people who are just waiting to, you know, hike again. That sense was not there. They gave a hike and it was, as you said, well anticipated, well telegraphed. Already the previous minutes had indicated. So that was a very important positive, that it achieved balance. The second big positive was it had a little for many sectors which were all incrementally positive. One, it increased the amount of SLR bonds that can count as LCR. So there's no mad rush to buy bonds. People can lend. That's a positive. A little bit more lending, easier lending will happen. And actually, at the lower end of the curve, yields went down for CDs, one-year CDs. If Kotak had a CD, or if HDFC Bank had a CD, or IndusInd had a CD, all those yields fell. Easier to borrow at the lower end. Secondly, the little bit of succor it gives affordable housing, a larger part is being counted as priority sector, so banks will want to lend. MSMEs can default up to 180 days, it won't be NPA. That forbearance is given up until January. So there's a little bit for everyone. In that sense, this policy is quite a well-rounded policy. But, you know, there must be 2 or 3 negatives which we should remember. One, look at the yields. At the end of the day, they ended at 7.92. So that can't be a positive. For NBFCs, clearly, that will hit home. For the entire system, that will hit home, that yields have gone up. Secondly, nothing has been done in terms of the buyer's strike that the bond market is suffering. One was expecting maybe some statements on liquidity or OMO. I don't know what the RBI can do. I'm not the expert on that. But the fact that there are no buyers for bonds in the bond market was not fundamentally addressed. And thirdly, you may achieve a great balance in terms of your statement, but out there are inflationary forces.
Yes.
I mean, what if core inflation went up, crude went up, the MSP turns out to be a very aggressive MSP. They can't do anything about that. They are data dependent. So that is what the yield is reflecting. That even if the RBI is very neutral in its policy, reality is inflationary. And you're seeing that in the yields.